Personal capital, free tool, net worth or balance sheet, and investments. Remove the cap on your capital using personal capital free tool. Here we are in our personal capital practice problem. In prior presentations, we practiced connecting to a financial institution, entering data so that we can then use that data in our practice problem. We then thought about a situation where we wanted to compile the data into an income statement, possibly using that income statement for something like a business to carve out an income statement we can then use for tax preparation for something like a Schedule C, noting that that is not the area where personal capital really shines. That's not where their focus is, but it does kind of have that functionality where you're getting the feeds from the bank and could then use that information to construct, say, an income statement with the help and use of Excel. So we did that in prior presentations. Now we'll take a look at the area where personal capital does shine, and that's going to be in the net worth area. Net worth including not only the checking account, but also other types of accounts like a 401k account, investment accounts, loan type of accounts as well that you can compile together. Now this will be shown on the left-hand side. So we have our basically net worth calculation, which is right on the left-hand side, which is one kind of a balance sheet. That's what a net worth calculation basically is. Your assets minus your liabilities would be basically your balance sheet, kind of your net worth type of calculation here. This is also a navigation screen because if I select any of these items, it will then take me to more detail about that particular account. So that's kind of a nice way to be navigating through this as well. Now note that this is going to be different. This is different than what you might see in a QuickBooks scenario. So let's do a comparison of that. If I go over to QuickBooks, for example, QuickBooks will be constructing a balance sheet and income statement as well if we were to put financial data into the QuickBooks system. However, within a QuickBooks system, usually we're looking at one business data rather than personal data. So one suggestion from your accountant for QuickBooks would be to pull out your business data normally and then try to just have the information for a checking account possibly that is for business in something like a QuickBooks, keeping that separate from a personal checking account and other investments you might have in your personal accounts. However, you can, and I do actually use QuickBooks to track personal information as well. It does a great job to track personal information and create financial statements, balance sheet, and income statement for the personal information as well, but it does it in a bit different form. You can connect to the financial institutions in something like a QuickBooks or any other type of double entry accounting software like a Xero or a Wave accounting software is actually free, I believe, if you wanted to try that out. But if I go to the first tab, we have the same kind of functionality that we can connect to the institutions. However, the stuff that we're getting from the institutions will be different than personal capital. We're not going to get the ending balance information from something like a QuickBooks. We're not going to pull that from the bank. I'm not going to pull the ending balance from the bank, but rather we're going to pull the detail from the bank or the financial institutions, use that detail to construct then the balance sheet. And then when we look at the balance sheet, then we're supposed to basically double check that balance sheet to what is on the financial institution with the use of, like, say, bank reconciliations. So that works really well if you're talking about something like a checking account, whether it be personal checking or business checking, because what you're really doing is putting an internal control in place so that you're double checking your books to basically what's happening on the bank's side of things, and that's a really good thing to do. But if you have like the other data, like investment data, then if you were to track that in like QuickBooks, typically you wouldn't be updating the data within QuickBooks by just pulling it from the financial institution. You would have to make periodic adjustments, recording the unrealized gain or loss periodically. Whereas if you look at personal capital over here, what's happening is although the financial data is being pulled in from the transactions, we're not using the transactions to create the balance sheet. The balance sheet is completely dependent simply on the financial institutions. So there's pros and cons of that. We're not double checking then things like the checking account with a bank reconciliation or anything like that, which we would typically do with a double entry accounting system, but we get this nice recap just like all in one place. And that's really the benefit of a personal capital. So you might use actually a QuickBooks double entry accounting system either for business and or for personal, and something like a personal capital which will give you that ending balance sheet directly from dependent on the financial institutions. And so that's the nice thing that we have here. is all the institutions that we can pull together. We can kind of put them in one place and analyze the data in one place. We can do so, of course, with the screen to the left, and we can then see the detail in it by going into that detail in this format. We can also go up top to the overview and to the net worth calculation here. We can close up the pane to the left, and that gives us a nice net worth kind of chart. This, once again, is something that you don't typically see in a QuickBooks scenario is your net worth increasing. The performance report in something like QuickBooks would be the income statement. But this will give you a kind of chart of where you stand over time. And that's a nice little chart. You once again have basically your balance sheet down below. Cash, investments, credit cards, mortgage, all that kind of stuff. Anything that comes from a financial institution, which would include, of course, cash, 401k plans, which are also, once again, more difficult to connect to QuickBooks because you're not pulling in the ending balance. You're really recording the activity. And then you have the question of, do you want to record unrealized gains and losses, meaning gains that you haven't really sold the stock for yet? There's a question on a double entry accounting as to how to record unrealized gains and losses. Obviously, if you're looking at this type of software, it's just going to pull in the current value and show you what the current value is at that point in time in something like investments, like stocks, mutual funds, and whatnot. Also note that if I hit the plus button over here, we could then add other institutions, which would include the banking institutions. So if we have checking accounts, saving accounts type of things, CDs and whatnot, we could include the loan because that's from a financial institution on, say, a mortgage or other type of loans that should pull in. Once again, just giving us that ending balance where the loan stands at any given point in time. And then we can also add other things such as the value of the home here. And this would be more static things normally, but this one actually has an appraisal tool. And you have the same kind of issue with an appraisal tool with financial accounting. If I was to put the home on the books, or if I had a building for a business purposes, normally if it goes up in value, there's a question as to whether we should record the increase in value because it might be a temporary increase. It might go back down again. We didn't really realize that we haven't sold it. But here, because this is on your personal, you might want to try to revalue everything to the current value of the home. People like to see what's my current value. And you have an appraisal tool here, which is the Zillow appraisal, where it'll pull that information in, which is kind of neat. And then you can also, and we might look at that a little bit later, you can also go to the more information over here, add something like a car, which means you would basically be valuing the car. You might look up the Kelley Blue Book on the car, jewelry, art, stocks. These would be things that you couldn't pull directly from the financial institution, but things that you want included on your balance sheet so you can kind of compile it together and think about your asset allocation, your liability allocation basically in one place. Note the benefit of this from your financial institution is that typically like a 401k plan or a financial institution will typically have a lot of detail that is on their website, or they'll give you reports of all this information. But if you have multiple areas, you have your mortgage at one institution, credit cards at another institution, and then your savings accounts somewhere else and checking accounts and whatnot, then the whole picture, the whole net worth picture is kind of scattered all over the place. And then this will help you to kind of put it in one area and then do that asset allocation, which might help you to make financial decisions in the future. It might help you actually just to track your information as well. So I'm going to close this back out. So that's going to be our net worth. If we go to the banking, of course, we have the budgeting information up top, and then you have the investing. So when you're thinking about the investing section, then we're thinking about things that are in like stocks and bonds, things that are with a mutual fund. So if there's a 401k plan or something like that, then we're typically thinking about investing. Now note, with the investing, this is some place where QuickBooks does not shine typically. If I go back on over to QuickBooks, note that investing would be here on the balance sheet. And QuickBooks, although we connect to financial institutions, will not typically pull in the ending balance on something like a 401k plan or mutual funds or something like that, stocks and bond type of investments, because that's not what it's designed to do. It's designed to basically, you put the adjustments in and compare and contrast using the double entry accounting system. And again, there's also that question as to whether or not you should be recording unrealized gains or losses, gains for the increase in the value of the stock or the increase in the value of the bonds for which they have not been sold, because there's a question as to whether those gains are temporary. Should you record them every time the stock market goes up and down, or should you say, hey, that's just going to be a temporary increase and decrease, and possibly not record them? So because of those situations, then when you enter the data for something like investments into QuickBooks, you usually do that manually, and typically you would probably do it for the entire like 401k plan. I might have multiple different things I'm invested in an IRA or 401k plan or my brokerage account or something like that. I would put it into QuickBooks probably as one lump sum so that I get basically that one balance sheet lump sum type of transaction in there, recording the gains and loss periodically as it happens. And then on the personal capital, when it pulls into personal capital, it'll give you that more detail on the holdings. So you can go down here and say, okay, what are the things I'm actually invested in? And it'll give you more breakout of that investment detail. That more breakout of the investment detail will also be on the brokerage statements and whatnot, but those brokerage statements might be, scattered between different companies that you're working with as well. So it could be nice to have them in one area. Then of course it gives you some charts for your performance here. This one, the U index versus the S&P index. If we go to the investments up top, it's the same kind of things that we have on the side to the right here. So investments, balances, performance, allocation, and the US sector. So if I go to balances, then we have our information on the balances. We've got our nice chart up top. So this chart doesn't have a lot of activity, considering there hasn't been much in there for a long period of time. But if you have information in there for a longer period of time, hopefully that'll be a nice increasing, chart. And then it has your information. Then down below, you can then select the accounts that you want to be applicable for it as well. Then we've got the performance. So performance information doesn't have a lot for our information down here because it hasn't been in there for a long period of time. But once again, it'll give you that comparison of the performance data. And then we have the allocation. And this is one that's probably one of the more useful areas because you can pull all your information into one area and then see that full allocation. So when you're trying to compare how much should I be putting in cash versus how much I should have in stocks versus US stocks and stocks, other types of stocks and whatnot, how does my home fit into my total asset picture to see what my allocation should be for my assets and liabilities and whatnot. It's difficult to do that, even though you got a lot of neat information in most brokerage statements and most brokerage accounts, because it doesn't tie in. If your 401k plan is through your work, they give you a lot of good information, but they don't have everything else in one place, such as your cash in some other institution, your mortgage, your home that would be included and whatnot, so that you could see your asset allocation in one kind of location. And this is just practice data here. So the allocations, you can then determine what allocations you think are best. These are not designed to be the best asset allocations or anything like that. But whatever starting point that you have here, then you could start to say, okay, let me think about what the ideal asset allocation is to mitigate risk or whatnot, and you have everything in one place. So this is one of the really neat tools to have in something like the personal capital. And then it breaks it down here: cash, international, I believe, bonds, and U.S. stocks and alternative types of investments. And this is the type of thing, this ratio analysis is the type of things you can compare to professional investors. When you look at professional investors, they're gonna say, you should have this kind of allocation between this, that, and the other thing, and you could start to kind of mirror that allocation or see how close you are to it, whatever the recommendations are, by going to something like this and having your data in one place so that you can then make those determinations. So again, that's one of the big benefits that are here. Then next time we'll take a look at the planning tools, which is the other big benefit. So once you have your investments in place, if you have a 401k and whatnot, then the goal is to be thinking about the future. There's two ways you think about the future. One is the budgeting situation. So that's going to be kind of short-term, year-to-year future thinking. How can I, spend my cash in a more efficient way and whatnot? And that's not really the biggest place for this software. What they're probably better at would be the planning, the bigger picture planning for like retirement planning or particular saving options. The main one typically being retirement planning for most people. So once you have your information into the investments and you've kind of thought about the portfolio mix, you'd like to look at the retirement planning, typically plan it out, and once you have it set, once you have the ratios set, then hopefully you can leave it alone and let it grow from that point in time going forward. So we'll probably take a look at the planning tools in a future presentation.